FirstRand operates as Rand Merchant Bank, First National Bank and Westbank. It is predominantly South African based, has a market cap of 170 billion Rand, price to earnings ratio of 11.6 and a dividend yield of 3.2%. Singa, let's get your thoughts up front here on FirstRand.
FirstRand, it's a great operation, great business, strong presence in South Africa. It's got a strong retail franchise in South Africa and other arms in the business as well, like their merchant bank, their vehicle finance bank, which is the lender in the market, Westbank. It's a great business with great history, strong leadership culture. I think that the bank is leading the digital space, which indicates that they have a foresight, they have the capability to lead and be the bank of the future.
A glowing report from Singa. Paul, can you add to that?
Yeah, look, you've got to hand it to them. First national bank within the FirstRand stable, 100% owned, does a fabulous job under Michael Jordan. He's now being replaced. He's gone off to make wine at Bartini, good for him. But I think they'll continue to roll forward. I think they've gained a lot of the sort of younger, more edgy market, and hopefully those people will start earning real money in the foreseeable future. I think Westbank is definitely a plus in there. RMB is a big plus, doing fine except for that first strut debacle that's going on at the moment. I think a lot of the share price gains we saw on this stock in the last 2 years or so came from the reorganization of the whole FirstRand group and the elimination of the cross-holdings.
So there was huge value unlock, in other words.
And just people like overseas investors working out, that's what it is, that's what it owns, that's what its earnings are. You'd be surprised how those kind of look-through issues can have an impact on share price valuations.
Singa, with all the positive news and the share price at current levels, is there potential for more upside? Because it's obviously not about the quality of the business, it's about whether it's a good investment at the current share price.
Look, at the current share price, it's a bit expensive. If you look at the group itself, their earnings, they come more from their relatively high exposure to the unsecured lending. So now that unsecured lending space is currently under pressure. Therefore, there won't be any new borrowers into the market because obviously there's a lack of growth in the economy and lack of employment as well. So I don't see any short-term catalyst on the stock at the moment. Therefore, I don't think the share price growth will go that much as it has done the last 2 years.
And Paul, that's pretty much the sentiment from a number of different players. When they look at FirstRand, always very cautious to say, fantastic business, but the share price has run hard.
Well, look, I mean, they're gaining market share, so that's exciting. They have that thing going on in India. You know, that's a big country with lots of people, potentially, to grow another leg to the business. Although, I don't know, I mean, one must understand that I don't want to be a harbinger of grumpy stories, but that thing with First Strut, which RMB underwrote and brought to the market, in aggregate, banks are going to take R1 billion write-off on that thing, which is ludicrous when you think of the trouble they go to in terms of bad loan provisions in the medium and small, individual market. So it really comes back to that point I made at the top. You can never be sure with banks what they're going to bring and what's coming around the pike. FirstRand looked fabulous, 5-7 years ago. Suddenly they had that big write-off related to a portfolio of investments that they were running out of an office in Sevenoaks in the UK. I'm not saying there's anything like that under the hood, but who knows? By nature, these businesses are prone to these risk-related incidents.
Singa, can you take that discussion a little further?
Yes, of course. Look, the banks they do have this tendency of, being greedy and engaging in transactions that are not well thought out and are not quite scrupulous. So they're inviting themselves.
We really are taking this discussion further.
They're inviting regulation to themselves, which will add cost layers and which will make their businesses less profitable than they should be. So I think this is not, the FirstRand issue is not quite good for banks.
Hot or not on FirstRand? Theron?
No, I thought that was well put by Singa. So, I mean, for me, it becomes an issue of lower profitability going forward, more regulation, lower price to earnings ratios, but still making pots of money. So, I don't know. I think at 30 Rand plus FNB, FirstRand, not hot for the moment.
Hot or not, Singa?
From the share price perspective, I don't think the share will run as hard as it did in the last 2 years, therefore not hot.